Let's talk technicals right now. Here to tell us why she's still bullish and how investors can benefit from recent market moves, Katie Stockton, founder and managing partner at Fairlead Strategies. And I was thinking about you, actually, when I was listening to Phil. I was doing both. I can do a lot and come up with unbelievable segues and stuff. But I was thinking about all the slight weird news tidbits that have been moving the markets around for the past month. And I'm just wondering whether you hear those or as a technician, that's just totally noise. Maybe you look at it in hindsight to say maybe that's what caused it, but does it matter in how you're judging the internals of the equities markets?
Well, I definitely care about the reaction from the market, and it is noise. And what we can do to kind of manage through that noise is by looking at indicators that help eliminate it. And by that, I mean looking at moving average-based tools, and that can kind of smooth the trends out, even on a very short-term basis. So I see that noise as something that we ignore to the extent that it's not affecting the prevailing trend.
Because it would, I mean, I was thinking, God, it'd be hard to be a technician when you got, all your ducks in a row for why something is happening, and then, the president tweets something. It's like, whoa, you can't do that. It was going exactly like I thought until you did that, and there's no way that you can anticipate that.
I can't predict that, of course, but it doesn't tend to impact the charts in a longer-term fashion. So our indicators still remain pretty valid throughout that kind of noise.
Well, since last time we were on, we got another scare.
Right, we had a nice, healthy pullback.
What was it? What do you calculate it as? 8%?
I'd say 7% or so on the S&P 500.
You said it was healthy. You liked it.
I like it, and the reason for that is that sentiment got overly bearish into that decline very quickly, just like at that June low. So
by what measures are you looking at? What are the measures you're looking at in terms of sentiment?
Primarily the CNN Fear and Greed Index, which is quite good at both highs and lows.
Who does that? What did you say? Who?
CNN.
They ramp that up themselves with their cover. How can you possibly use it? Really? We owe them for this big rally.
Transactional gauge of sentiment. So that's what matters to me more so than the investor polls, which can be pretty sensitive into declines. But we did get that sentiment extreme, and we did so without a big breakdown. So the S&P managed to hold up above support. The breakdowns that we saw on the individual stock level were really concentrated in lagging sectors like energy or retail. So the losers kept losing, and the leaders managed to hold up pretty well.
We've been, through the tariff wars again, and how far are we from new highs again?
Well, about 3.5%, right?
3.5%, which do you have a feeling we're going to look back and say, oh, my God, here we are at new highs again, even in the middle of a tariff war?
I do think it's a near-term sort of forecast for the S&P 500.
Is to go to new highs.
To go to new highs. And I say that because just in the past couple of days, we've really seen short-term momentum improve off of that retest of short-term support. So we have broad-based, we call it moving average buy signals, and that's around the world. So we have them in China, we have them in Europe, even though it's lagged.
What do you make of some of the more cyclical sectors like semis or housing, where people are worried about a recession on the one hand, and yet you see semis making new all-time highs on a relative and absolute basis?
On the surface, the charts look very similar to the S&P 500, so you can translate that bullish view to those sectors. Semis, for one, have much more room to that final resistance on their chart if you look at something like SMH. So to me, that's compelling in terms of potential outperformance, a little beta to that sector. Right. And tech, it still continues to be the established leader.
Last time I asked you about the 10-year, too, and I think you did talk about a yield downside objective that sounded ridiculous.
Yeah,
I think we went through it.
Felt it at the time, right? So the support now is at the 2012, 2016 lows, which are just below about 1.4. We have started to see signs of downside exhaustion from our counter-trend measures.
You're also
seeing on the upside.
I'm exhausted covering the yield.
Exactly.
You talking about the way we talk about it or the chart?
It's not because of you.
Not us.
Not you. But the momentum has certainly, lessened on the downside for Treasury yields. And in the same vein, we're we're seeing that on TLT and other benchmarks of
because it's suddenly gotten, I don't know which chart I'd look at first to try and figure out your S&P chart. I might look at that chart, or the 2-year or 2-year, 10-year or something.
Everything's certainly tied in, and it would make sense to start to see those defensive sectors start to underperform. It doesn't mean they go down dramatically in a stronger tape, of course, but anything that's more interest rate sensitive, as we get some stabilization in Treasury yields, you get a little sector rotation that would also sort of foster a bullish view.
What about, can I ask about gold and crypto?
Just hold on a second.
Okay, sorry, it's your show.
Is he a client?
No.
He is like milking you how do you get clients, and how do you?
I can share my research.
Well, that's what I mean. How do you? No, don't
to.
share it. But how do you get new clients, and how do you? What's your fee schedule? How do you do it? Because this is ridiculous.
Well, I do have a subscription model.
I've never seen him so engaged. I've never seen him so engaged or interested in, and it's all free. That's what you're.
That's
and
true.
I have a buddy
Why don't you sign up with?
That's right.
Fairlead. Are you in the book?
I'm not in the book.
You're not in a telephone book. You know, switch it.
I'm just trying to get as much info as possible.
Quick answer, gold.
All right, go ahead. Ask your question.
Major base breakout.
Yeah.
It's obviously lost some short-term momentum, and that was very natural based on how far it had gone and how steep the uptrend was. Looking for the pullback into sort of at least the 1400 range, and then revisiting it for a buying opportunity.